Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talking about? Well, I want to talk a lot about the methodology and action, specifically my next 100 trades, good, bad, ugly, and miss. Somebody said a while back, hey, you just show the good trades, and I do show a lot of good trades because there's a lot to be learned from good trades, whereas the bad trades, you just basically honor your stops and you get stopped out. And there's also a lot of money management involved and other things like that with good trades. So I'll flesh all that out as these trades develop. But I'm going to show you the good, the bad, the ugly. And this week there was a missed one. And that really makes a huge difference, as you'll see in just 1 second. We have a couple of mystery charts this week. So these could be upcoming trades, part of that 100. I want to do a brief TFM 10% system. And then housekeeping, I do take requests. If there's something you want me to cover, let me know. Send them to davelandry.com/contact. It makes my job a lot easier. If you need to reach me, there's my Twitter handle, @DaveLandry, TRDR. I need to see about getting a better one than that. But anyway, if you want the slides from this presentation and all the other presentations and a bunch of other stuff to keep you busy for a long, long time, including all 3 of my books in PDF format, go to davelandry.com/StockCharts. Also, each week, it's a little bit more open-ended than this format now, and this is obviously not a live presentation, but every week on Thursday nights, usually unless there's a holiday week, I do a webinar at 6 o'clock Central Time, and I'd love to have you there. Come and participate live, ask questions, and if you want to submit something ahead of time, I would love to have that too. Again, it makes my job a lot easier knowing what I'm going to cover. All right, let's talk about the mystery charts and the methodology in action. Here's a mystery chart. This is a short. You can see that it was in a downtrend and then it began to accelerate in its downtrend. It pulled back sharply from that. The entry is here. The stop is up here just in case we are wrong. And the initial profit target is down here. So we'll see how this one shakes out. And I'll follow up obviously in upcoming webinars. We actually have a buy signal, believe it or not. This stock had gone down for a long, long time. Nothing to do there, right? Especially as a trend follower. It then began to bottom out and rally from those lows. If you're familiar with classical technical analysis, you'll notice it's also a cup and handle type of bottom. And as far as my patterns, it is what I call a bow tie. A little sloppy, meaning that it took a while to cross over, but it is a bow tie nonetheless. It's also a pattern I call a first thrust. And if you get those PDF books I mentioned earlier, you'll have these patterns, or just watch all these prior shows and watch all my weekend chart shows on my YouTube channel, youtube.com/c/Dave Landry for those. Anyway, you can see nice little rally from lows, pulls back, forms the bow tie, and the entry is right around 15. Stop is 1170, if memory serves, and then we're looking for an IPT. You broadcast that up, the distance from the entry to the stop. That gives you the initial profit target, or IPT as I often call it, right around 18 and change. So we'll see how this one shakes out. No trigger, no trade. If it keeps pulling back, then obviously we'll find something else. So here's something that's really painful. And, I was thinking, it's like, boy, I really don't feel like showing this, but I got to thinking, it's like, you know what, Dave? Show this, and that way maybe you'll learn something in the process. And one thing I was thinking about right before I began recording is you'll actually learn a lot more from me from my mistakes in a lot of cases than from the things that I do right. Also, I think it's important to feel the pain of others or understand that others have the same sort of struggles and same sort of pains. Now, there's these gurus out there, like I saw one recently. I was looking at an old post that I made where somebody had said that you can make 5% a day. And I told my clients, I said, I love you guys, but 5% a day, I think I'm going to throw 10K at this guy. And at the end of the year, I think it'd be worth about $2 billion. And, so that'd probably be it for me. As much as I love my clients, if I made a couple of $1 billion in a year, you might not see my fat arse again. Anyway, the reality is sometimes trading can be a little bit harder than that. And all the time, obviously, you can't make those type of ridiculous returns. If you could, then you'd own the world, right? The other thing is, it could be a really lonely sport, and that's where my Facebook group has really helped out a lot. And as I've said quite a bit, my wife Marcy's told me that that's the best thing I've ever done. And it really is good to work with these other traders, see what they're doing, and see that we all kind of fight the same fight and have the same struggles. There's no get rich quick in this business, but if you work at it, you can be pleasantly surprised. So anyway, this was a missed trade of the week, and one of my clients had brought it up in the Facebook group, and actually a couple of guys were talking about it as a buy at B pattern. I'm going to walk you through a couple of those examples in just 1 second, and we'll take a look at this one too. So the buy at B, the theory is you're buying an IPO at a new closing high, and I have what I call the day one rule. So if during the first week of trading, the high is set on day one, it has to close at a new closing high, and it also has to close above the day one high. Go in and watch the presentations that I've done on IPOs and all those other aforementioned links and videos for a lot more on that. And I'll flesh it out in another example here in just 1 second too. So anyway, the high was set on day one, so it not only has to close a new closing high, it also has to close above the day one high. So you can see right here, it actually did close a new closing high, but that's not a signal. So the signal would have been here, and that was on Friday, June 3rd. And I was just super busy at the time. I had a bunch of intraday trades on, I had some options on, and all these things had to be managed right around the close. By the time I got through dealing with all those things, I totally forgot about this stock. I tried to get in after the close, and the spread was just too wide. In hindsight, I should have put some bids out there to see if I could get the stock, and I don't remember if I actually did or not, but I know I did not get it, as I found out on the 7th as it took off without me. And I'm going to show you how important that would have been in just 1 second. Now, the next 100 trades, as I said a second ago, somebody criticized me for showing only the good stuff. And I said, you know what? Every mystery chart is shown ahead of time, and usually most of the follow-ups I do are on the mystery chart, so that's not in hindsight. But I tell you what, just to make everything fair, I'll show you my next 100 trades with zero hindsight. And they're going to come from the mystery charts, which come from my trading service usually, or Facebook posts to Dave Landry's Trend Trader. So I'll make a post, or somebody else will make a post, and I'll chime in and say, okay, I'm going to take that trade. So that way there's zero hindsight. Now I'm going to show you everything warts in all, and you can see some of that this week, really. And the other thing is I'm showing a representative sample. So I'm not going to show you every trade I make in every account. I'm going to try to work to just show you a representative sample. So if you were doing something very similar, then your performance should be somewhat repeatable. Maybe over time I might normalize it out to, let's say, 100K or something, so you could see how many shares you would have had on based on that. Sort of like I do with the core trading service, and I'll point that out in a few minutes. Now, this was one I've already shown. I just want to show it one more time because it's been so long in between trades. It's almost like a month in between these trades. So I pointed out that this is a buy at D, and I played a token position in an opening gap reversal. We'll talk about opening gap reversals in a few seconds. But I believe on the prior day or whatever, I had very small share size, played this little reversal in here. So this is what happened. Day one, okay, it's day two, day three. Day three exceeds the day one high, so that day one high rule is no longer in effect. In fact, this is a new closing high here. Day four, also a new closing high, and day five. So the pattern would actually buy on the close. So you can see that's the highest close. And by the way, my favorite buy at these are when they do trigger on day five, because it doesn't give everybody a lot of time to think about getting into an IPO. And sometimes, let's say they come public on a Monday, on Friday, they make that new closing high. It's kind of like the one I just showed you. It's like, oh, darn, I missed it. And then people chase it and push it even higher. So in this particular case, about 1,000 shares. And it was 2 points higher, and I figured that was a pretty good IPT, gift horse type of situation for an overnight trade. So I went ahead and bailed on half, put my stop at break even. This is a lot of the money management that I preach. You want to position yourself for a potential longer term home run, but go ahead and take some partial profits along the way just in case that doesn't materialize. And here's the actual trade. So you can see I picked up $1,000 overnight. Better than a poke in the eye, right? Now I do trade, by the way, I do trade multiple accounts. Again, I just want to show you some representative samples of these trades so you can see how it shakes out. And that's a spreadsheet for the first trade. So I was off to a pretty good start. Now here's one that somebody brought up in my Facebook group, CJ, and I liked it because it was a potential opening gap reversal. And you can see right here, my post down here, it's like, good eye, my gap scan didn't catch it. So it's really good to have more than one set of eyes, I should say, looking at the market. So in this particular case, my wife was saying, like I said earlier, she was saying that Facebook group is the best thing I've ever done. Well, she meant more for like me mentally, because I do struggle a little here and there with my trading, as we all do, and I think it's good for us all to see that. But the other advantage is I'm able to profit from the group because a lot of guys are looking for the same exact things that I am, and this is a perfect example here. You can see pretty serious downtrend in place. We're looking for a day trade, or as I like to call them, intraday trades when something like this happens. You can see it gapped higher. And by the way, we've done complete shows on opening gap reversals. But the theory is you got a market pulling back after a strong trend when the gap's higher. A lot of times that market will reverse into the direction of the trend. Not all the time, obviously, as you'll see in just 1 second. But when that occurs, you can pick up nice little profits pretty quickly. Now, let's take a look at the intraday chart. In a case like this, it's $180-something stock, so you'd have to put up $18,000. And on the short side, which could be tricky, or can be tricky, I should say, a lot of times I'll look at deep in the money puts. I know it's a little bit beyond the scope of this presentation, but if you look at my YouTube channel, I do talk a lot about trading options, especially in these particular cases on the short side. So picking up just a couple of options, I only have to put up $1,800 versus $36,000. Now, I do use money management, so obviously that $36,000 isn't at risk. But technically, the stock could get halted and open up 20 or 30 or 40 or 50 points higher in some sort of crazy buyout or God knows what. So I like going in with knowing the worst case scenario. Let's say my money management gets blown out the water, or something happens to me, like yesterday, for instance, I had to leave the office unexpectedly, and I could have easily forgotten about something like this because there was other things happening. So at least in this case, the worst that could happen to me is $1,800. So there is some advantage to options. Now, these are super short dated options. In fact, this was 2 days before expiration. Anyway, so I ended up buying the options here. You do have to anticipate things a little bit with options. Again, a little bit beyond the scope of things I want to get into with this particular show. But in showing you these trades, I do want to show you everything that I do. So you kind of have to anticipate it as opposed to waiting for a more solid entry on that. And I decided that 4 points would be a good intraday profit. In fact, I'd be pretty happy if I could pick up 4 points on the trade. So I set a limit order for 4 points higher in the options, and that was hit, fortunately. And then at that particular point in time, I also wanted to make sure that I was positioning myself just in case this thing turned into a home run. You should never trade for just limited gains. You should always have an unlimited piece on just in case this thing imploded another 20 or 30 or 40 points, whatever the case may be. So I doubled up in this particular case and bought one option here at 175. So I'm back to 2 options total. And then what I did look to do was peel off the other option. And you can see I squeezed a little bit more out of that. So I squeezed about 90 cents more, 89 cents more out of the options, more than $4, that is. And that kind of helped pay for those free rolling options, so to speak. So that's how it all ended up. I did this across multiple accounts, but again, I just want to show you a representative sample of what can be done or what I am doing. So it turned out to be $673 in one day. That's better than the poke in the eye. Now, I did, in order, again, to try to position myself for longer term gain, in this particular case, even if it was a day trade, I decided to hang on to those 175s just in case this stock implodes overnight. It's already a free position, so to speak. I figured it's okay. I already have close to $700 in this thing, even if I lose everything on those remaining options. And I did. But hey, better than poking the eye. Now, here's one I kind of screwed up on. It's Apple. You can see it's begun to roll over in here. It's kind of topped out. And you can see that it sold off really hard. This was on my Landry list, which is part of the service I publish every day as a potential short. And you can see it pull back from those lows. Now, here's my thinking. This was on a weekly option expiration. We had a little bit of a gap higher. I thought that it might have the potential to turn right back down. And I saw there were some cheap puts trading at around 31 cents. So it's $31 a contract. So for $31, I can control almost $15,000 worth of stock. And I couldn't believe those options were that cheap. Well, I guess they were cheap for a reason. And I sort of anticipated the setup a little bit. If memory serves, I think I put in a limit order when the options were a little bit higher, just trying to kind of like an S&G type of trade. And unfortunately, I did get hit on that, and then I lost on the entire position. But I only put on 4 contracts, and I'll show you that in the spreadsheet in 1 second. Now, here was the bad trade of the week. So this should make the social media people happy to see that, hey, I do have bad trades, and I do now at least make sure I show you them, because we're going to show you the next 100 trades, right? Day 1 did set the high for the week, so it's got to close above that high. So I bought it on that day there when it closed above the high. Very simple pattern. And my IPT was 2 points higher. Unfortunately, after showing some initial promise, it came right back in and stopped me out. And this thing continued to implode. So that's a whole nother lesson in and of itself on the importance of using stops. So you can see how this thing shook out, and it was pretty ugly. How's that for an oxymoron from a trend following moron? So how did I do? Well, so far not so good. If we take a look at the spreadsheet, I'm only up about $179, which is better than poking. I'm not complaining in the first month of this experience. Now, I do take other trades, just a FYI. I do take some intraday trades here and there, but this is just trades that I announce ahead of time, and longer term, it's going to be trades that come directly from my trading service, and then occasionally, like the CRM, an opening gap reversal type of trade, and some IPO trades, which are a little bit outside of the core methodology. Although, by the way, the IPOs can also fit within the core methodology too. The money management is certainly the same there. Now, on Friday, the flickery ticks may have at least opportunity cost me at least $3,500, because I do trade more than one account. So it pains me to start doing that math. But anyway, you know, if I would have taken that trade, the numbers in this spreadsheet would look a heck of a lot better. It also shows you, by the way, that when you're trading trend following in general, the outliers are key. So this $3,500 gain obviously would have taken care of a lot of sense. And you never say hope in this business, but hopefully if I can keep my risk to about 2%, so that'd be about $2,000 or $100,000 account on something, then it doesn't get too much uglier than this here. And then I also have the potential for unlimited gains, and I'll show you that in just 1 second. So there's no where the money is core trend trades yet. Now, occasionally, like I just said, these IPOs can turn into a longer term trend trade, so that could work in my favor. But something like these opening gap reversals and these short dated puts and things like this that I'm playing, those will never turn into huge winners, but they might turn into a decent winner over a day or two. But the real money is in the longer term trends, as I preach. And an example of that would be the ARLP. You can see it's up, knock on wood, 327% round numbers, and overall about 17K. And this is based on a hypothetical 100K account. Although I do have actual trades here, I do have at least 1,000 shares in more than one account, so I can show you those when it eventually stops out to see how it pans out. But that's where the real money is, the longer term trades. Some of this S&G stuff can get you into a little bit of trouble. The IPO buy at B, though, can work out really, really nicely. And that's outside of the core methodology, so to speak. So you can see, again, decent trade there. But eventually, and again, I hate to use the word hope, but hopefully I will have some of those core trend trades in here, or maybe those IPOs will take off. What have I learned so far? And I think this is going to be a great experiment because I think you guys can learn a lot from me too, especially from my mistakes, as I said earlier. You got to be careful that S&G trading. I saw a meme. It was, what's her name? Amanda Heard and Kamala Harris. And it said S&G. I wonder what that meant. Anyway, I digress. So I lost $124. And I remember thinking on the day, what's $100 or so? This is going to be just a fun S&G type of trade. And the problem is, if you did that every day, you would lose $30,000 a year. So you got to be careful with frittering away a little money like that. All right, I want to do a brief TFM 10% system update just to kind of show you where we are with the market. As I said last week, if you look at the buy line, which is 10% below the 50-week closing high, and you pay attention to that, anything below that is where bad things happen. And that's Baleo and Gayard, I believe, once said that, and they were talking about the 200-day moving average, if memory serves. But for purposes of the S&P 500, as a general statement, bad things happen below the 10% buy line. And you can see back in the pandemic, obviously, we had a 30-something% slide, and I think it was about 30% or more from the close below the 10% buy line. So once the market dropped 10%, a lot of times it can get much uglier than that. So that's where bad things happen. And so it's no bueno when it's below that line, or can be no bueno. And as a general statement, as long as you're at or above the line, the market's in pretty good condition. So this one little thing in and of itself, for the overall market that is, especially the S&P 500, can help to keep you out of a lot of trouble. And it can help you to determine what side of the market you should be on. So again, we're kind of back to no bueno in here. Now let's look at the actual system and what the system is saying. So we did have a sell signal a while back in March, because we closed below the buy line and we closed below the 50-week moving average. That's all you need for a sell signal, as you can see there. And we had another sell recently. So what I wanted to show you this week is that we're still under a sell signal, so to speak. Now, there was a little buy in between. I talked a lot about this in prior weeks. I actually missed this buy. I had some people in my Facebook group point it out to me. I didn't realize that the low was above the moving average. You really have to squint your eye to see it. In fact, I've got it blocked in now. And the other thing was, it was weak. And I talked a lot about this in prior presentations. So it really didn't have the designer's intent in mind, or this is not what I had in mind, buying on weakness when I developed this system. So if you did take that buy signal, that's great. That means that you are disciplined and you're following a system. That's fantastic, provided you turn around and sold it and were willing to deal with the whipsaw. But you can see the market did have a pretty serious drop after that signal. So it was a good thing that even if you got whipsawed, so what? Whipsaws are frustrating, as Greg Morris says. But bear markets are devastating. You could survive frustration. Well, that's all my time for this week. I want to thank everybody for watching. Again, if you need follow-up information, DaveLeonard.com/StockCharts. If you need to reach me for anything, DaveLeonard.com/contact. So again, I want to thank everybody for watching, and may the trend be with you.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.